Good morning from Chicago. It's 8:02 a.m. Chicago time on the 13th of March, 2024. It is Wednesday, hump day. This is episode number 2635. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So today, no pre-market summary sheet. I'm going to dive right into it. The bigger things you need to know are that the market is pretty much flat. We're seeing a little bit of an uptick in Europe on the Euro Stoxx 50. They're up 44 basis points. Crude popping higher to 79 after testing the 76 handle yesterday. It's up $1.77. Copper's up 1.88. The overall risk posture is mixed. The S&P is in a balanced profile, 148,000 contracts traded. The inventory is negative 8%, meaning 8% more short than long. And the range is pretty tight at 12.5 points. Point of control shifting up to 52.39, which is a lot higher than at any other time we've had it. And that's really it. The overnight session, the big release today is GDP from Great Britain came in at 0.2% in line. Other than that, the calendar's been pretty quiet. There was a 10-year Bund auction in Germany, resulted in a yield of 2.31% versus the prior 2.38%. We have crude oil at 10:30. We have crude oil at 10:30. Crude's expected to have a surplus of 1.338 million, and gasoline's expected to have a draw of 1.9 million. And there's a 30-year bond auction at 1 p.m. today. That's basically what we've got in terms of the pre-market summary sheet. Bitcoin, all new highs, $73,450. Bitcoin's up 2.3% or $1,650. The other thing you should be paying attention to is the pace of the roll. It is Wednesday, and very often we are done with the bulk of the roll by today. I'll show you that here in a second if this website would just load. I guess many are looking at it. Hello, let's go. Yeah, their website, the pace of the roll is not coming up for me. 1 second. Yes, I'll flip the screen. I know it's still on a title block. Here we go. Here's the pace of the roll. Okay. There it is. Okay, so pace of the roll. So the roll is currently at 70.5%. 70.5%. The expectation is at 79% is where we're done. So let's look at that. So we are 88% done, basically. So by the end of today, we start to get a more realistic view on volume. The delta becomes more usable. We have not been able to use cumulative delta this whole week since it is roll week, and that information is not very reliable. And that's that. If you look at the NASDAQ, let's switch to NQ for a second. Since we are here, this website's so slow to load. NQ, pace of the roll. NQ is at 61%, finishes at 74%, so basically the same. By the end of today, the roll will be mostly done. And we can go back to our regular regularly scheduled programming, basically. Okay, so what do we have in terms of the market? Here's what we were looking at yesterday. Yesterday, on the CPI release, we had a splashdown. We had a quick flush that brought us to a double bottom at 76 and a quarter, and then we rallied back up to extend the range higher by about 45 points, low to high, and to put in this overnight high of 52.21. And the expectation is on the open, we're likely to pull back down and retest that overnight low. At the time of the trader bite yesterday, we had the market trading at the mid, where the point of control was, multi-distribution profile, clear excess at the low, very little volume, as you can see right here, very little volume traded at that low. This is very excess-like, very quick. This entire sequence right here took less than 2 minutes, for it to put in all of these bars. Remember, this here represents everything from 5 p.m. Central Time, Chicago time, when the market reopened, till 7:30. So this section here represents basically 14 and a half hours of trading. You can see what it did there versus this equivalent session, or part of the session, that was 2 minutes long. This is why I use point and figure charts and Renko charts. I don't want to see bars if nothing's going on, and I want to see that there are many, many bars when there is volatility, and we had volatility on that release. So we push back up, come back to the mid, and the expectation is, well, we have our overnight stat, and it's very, very likely to go and check that 51.76. That was what was expected yesterday. Here's what we got. We ended up opening in a very balanced open auction, okay, with the close underneath us. So the expectation is that we would drop back towards the close. We're opening basically in a gap, and we're looking for it to revert back and drop down and potentially test that 76. It doesn't have to take the 76 out and push through, but I expected a test. And what it did is it came in, it traded in an open auction out of range, dropped to the downside, very hard to trade, did not see any setups in this at all, falls through, comes down, puts a zipper in at the low, creates what is basically a somewhat weak low. I don't see an excess at that low, and then it shoots back up above our day generated prices, the mid, the opening swing, and so on, and then pushes to the other side, forms an IB in a poor manner. This IB structure is quite poor because basically the first hour was done as that bar was pushing through. So we don't have a proper test and failure. So we don't have clear boundaries for the IB. So the IB is going to be suspect for the session. I'm not trading IB pullbacks or anything like that in this kind of environment. Comes back down, respects the mid, full session and RTH, and then retests the mid only to break again and then finish at the high. So yesterday, the market took back a lot of Friday's selling range. This tells us that the market's still viewing any drops as pullbacks as opposed to a market that is overbought and is seeking prices lower. Friday's action really showed us that sellers had been found. I talked about this yesterday, and I'll review briefly. This kind of day here is a very important indication that the market has exhausted buyers and has finally found motivated sellers. Did not like that there was no excess at the top. You can see there's quite a bit of volume at the top. Not a huge fan of that. Market this day comes back to the prior day's balance, forms balance there, the point of control, and it finishes below the prior day's low. So it tests above, tests below, stays below. It's settled at 92.50, 51.92.50. 1 second. Settled at 51.92.50. To me, this is quite bearish. And if you recall, on Monday, the plan was to sell any pushes higher into this range. That's what I was looking for on Monday. And then yesterday, we ended up opening above in a gap after the CPI number. And we ended up coming down and testing the POC, the TPO-based point of control, and putting in a very clear excess first thing in the morning. So we came down, dropped into the prior day's range, tested the point of control, and then came right back up, leaving us with an excess at the low. This is important. And what this does is it pretty much refutes what happened on this day here. And then we finished the session at the top of the range. Yesterday was not quite a trend up day. It had some characteristics of a trend up day, but we did trade below the open a fair amount before we found buyers. It looks like the sellers are likely to get squeezed out here. Okay, so that's the summary of that. So today, if you look at the overnight session, look at that overnight session. There's very little going on. Very poor range. Remember, we're trading ESM4 at the moment. Very poor range. Nothing to price in. You have the point of control, mid, VWAP, pretty much on top of each other. Huge long zippers. Not too much to speak of. Here's the catch. The problem here is that the volume is quite normal. Volume now is 153,000, and on the roll it's 204,000. So the volume is not all that great, but what this could be doing is it could be coiling, and it's coiling right up against yesterday's high. The overnight high and yesterday's high are at the same price, right up against 52.50, the mid-century figure, with a very clear, clean top and bottom. This is basically an opening swing that we've been trading in all night. So if the overnight session had an initial balance, we're still trading inside of that initial balance. So this could tilt very quickly and aggressively. Generally, it does so 10 to 5 minutes before the open. We get the real move, and then we'll see what happens on the open. But overall, we're stuck here at the mid, hands off the mouse on the open for the S&P. This is now establishing itself as another rally market. Why? Why is it doing that? Because it has a terribly weak high against yesterday's high. And we did not find sellers up here, right? Otherwise, we would trade very little if the price is so high. If each one of us could be a consumer as well as a producer, because as traders, that's what we are. We can switch between being a buyer, a consumer, and a seller, producer, in a millisecond, right? I could sell a bunch, or I could buy a bunch, and immediately. So imagine an economy where I could be a producer and a consumer, and as soon as prices reach so high that I see that, oh my God, these prices are incredibly high, as soon as I come in as a producer, and with many others, we flood the market, we'll find that there are very few buyers remaining as we hit every bid in the market. And so that creates an excess and very little volume at the top. We don't have that situation. which means that we don't have an excess up here, which means that prices are considered fair up here, right up against yesterday's settlement. P-settle is right on top of VWAP mid, and the high of the session is right on top of yesterday's high. This is not the kind of action that says sellers have been found. This is the kind of action that says buyers are holding new territory. They've moved the line, the battle line forward. They've trenched in right now, and it's very, very likely to continue to explore higher, looking for those sellers to find the next level of balance. So to me, again, up is most likely, more likely than down from an auction perspective. However, this is the market. The market's full of surprises. And as participants come in, they may see these prices as favorable for whatever reason, and it might drop. Don't know. But the action overnight and the fact that we're pushing against the highs and holding those prices tells me that we're not done to the buy side. That's what's key here. Okay? So to me, overnight high is probably very vulnerable. The entire range is 12.5 points. It's very, very poor. It is triple witching Friday. We don't have anything big here to come into. Tomorrow we have PPI and retail sales. Those could be movers. There was a surprise to the downside in retail sales last month. Initial claims, not all that important. And then on Friday we have Michigan sentiment prelim. That could move the market. That's at 10. And then next week, we have the Fed. Next Wednesday, we have the Fed rate decision. The Fed is going into a blackout period, and we have a Fed decision, and that could drive the decision-making, the risk-on, risk-off sentiment of the market. Again, we don't look at Delta very much, but if I did, I wouldn't be gleaning anything from it, as it's just sitting and completely dead across the board. So NASDAQ, a little bit more price discovery, a little weaker. The NASDAQ took out its prior day's high, has a multi-distribution profile, a little bit better price discovery, but really all it's done is it's come back to yesterday's point of control and is holding steady. The NASDAQ also looks neutral to me. It has not pulled back from these highs very well. So to me, the NASDAQ again looks bullish, but overall the NASDAQ is weaker as a result of the Mag 7 stocks not performing so great over the last 3 months, and especially the last month. So the NASDAQ is not looking so bullish, but still, here's where we are now. And this is yesterday's high, and yesterday started to breach this weak structure above. So it has moved in. Remember, I expected the NASDAQ yesterday, as I talked about it, I expected it to at least test down to this point of control here. The NASDAQ ended up pushing quite deeply into the prior day's range. The S&P did not. It did leave an excess. I'm expecting the NQ to potentially pull back this morning and then power through those single prints. NASDAQ, a bullish NASDAQ as well. And then crude was expected to push down into the 76. It got to 76.79 2 days ago. Yesterday held to 77.34 and has ended the one-time framing down yesterday and is gapping up today. Again, the crude oil Nirvana price is $28.50. We're above it. Not expecting crude to run very far. There really isn't very much for crude to price in. It looked like when we first opened on crude today, it looked relatively bullish. It looked like an open drive, and here it is. It has tested up and has come back to the open. So this is very likely to now reach into the gap and work itself down to 78.75, potentially 78.50. We'll see how that works out. Hard to tell what the bias is in crude for today's session, but the market bias, the imbalance was to the downside. This is why I expected 76, and that was refuted yesterday with the break of the one-time framing down. Yesterday's finish was quite weak. You look at the fact that we put a range extension up. We left an excess on the high, and we finished where? We finished below the open. So on a candlestick basis, this looks like this. This looks like this. It's not a very bullish candlestick with a big long wick on top, small wick at the bottom, and it's red as a candlestick. This isn't very bullish, but today, here we are gapping higher. Again, you know, price action does not speak as loudly as the profile does. The profile really tells us what's going on within that bar, and what the profile is telling us is the one-time framing down is broken. The POC has shifted higher, although the volume point of control actually shifted lower, and we finished on the volume point of control. So what this is saying is, even though the crude has broken up and is gapping up, it's doing so, very likely doing so on fumes. So my expectation, although currently my posture, the bias is neutral, my expectation is that crude is very likely, given those facts, crude is very likely to push back down, at least get back into the MC point of control, if not right back to where it was yesterday, down into the 77.50 area for settlement. We'll see how that goes. We'll see if I'm wrong or right. We have inventories today for this product just an hour after the open, so we'll see how that plays out. Interesting stuff in the 10 years. 10 years put in an excess last week, put in an excess on Friday. And then what it started to do is, if you look at the point of control and how it's shifting, the volume point of control, you could see that the Treasury guys, the 10-year traders, are shifting acceptance higher, except on Friday, you know, we did peak out, but we finished right on top of the point of control. So it really tried higher, tried lower, tried higher, finished in the middle. So we expect a balanced day. I expected a balanced day a little bit higher in the 10-year. But what it did is it created a balanced day a little bit lower. And then yesterday created a small excess at the high and a legitimate B-shaped profile. So we expect the ZN to come back down and fill in portions of this gap. My chart here is not back adjusted properly. There should be a gap here, and we're opening in a gap. I'm expecting the 10-year to keep moving lower. If the futures move lower, what does yield do? Does anybody know the answer to that? What's the market's expectation on yield on the 10-year note as the futures prices drop? You should know what it is because you're an expert futures trader now. But that's how the 10-year looks. The 10-year, to me, looks like it might retest the range. Might retest the range of yesterday, potentially pushing into the point of control. But overall, I expect the 10-year to shift down into the FOMC. Okay? That's that. Good luck today, and I'll catch you. Take care.